The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 27th. Terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us, listen to this one, each of us should be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one, because the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Would love to hear from you, 877-927-6648. If you can't dial in, we've got you covered. You can always send me an email, steve@tfnn.com. Inside that subject heading, if you would put radio show question, that would be helpful. And in the Tiger's Den, hey, any ping will do. So let's go ahead and get this show started on Terrific Thursday. Testify Thursday, I suppose. I don't know if anybody's even out there listening with all the riveting information going on. But look, if you are, I would love to hear from you. So let's go ahead and get this show started on, again, Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 140 points. Trade at 26,525. S&P is up 18. 29.24 is the print there. NASDAQ 100 up a little over 1%. That's 86 points. The Russell's up 4. Semis are up 6. So we've got green and mean across the board. Spot volatility index well below its 50-day exponential moving average. Was kind of peeking at it at the close yesterday, but it peaked and looked and moved lower, just like Goldilocks. Gold is up 12 bucks, 11.86. Silver down 11 pennies, 14.29. Lead the charge the upside at Amazon, up 35 bucks. Google's up 18. Tilray's up 13. Wellcare's up 14. Regeneron 12, AB Iomed, ABMD, down 6 bucks. That's the leader dollar-wise. Penumbra, that's down 5 bucks. That sounded pretty good, didn't it? Can't tell. Medical. I don't know what they can't tell. I know what they can't. They can't tell that they're not performing well today. They're up 5%. That's about 5 bucks. Marriott Vacations down $4. So we have things to look at. Of course, I want to look at what you want to look at. First, with regard to the markets, expect the market to take a breather right now. And the reason I say that, if we just simply take a look at the 30-minute time frame chart here for the ES Mini, we can see that actually it did form one of my Rhodes Momentum Indicator bottom signals. This morning when I was preparing the newsletter, for some reason it wasn't appearing. I don't know why, but it didn't. So I'll apologize to subscribers out there. And we've seen the market just simply do what it's supposed to do when it forms that bottoming pattern out there. And if you'd like to learn it, just become a Mastering Probability subscriber. You'll get access to that workshop. It'll take you through those 5 steps out there. But the reason why we say that the ES Mini is ready to take a break is because this nice move that we've seen off of that bottom finally got to a time to mark set up 9 count out here. And that was as we were coming on the air at 1 p.m. Oftentimes, not always, but oftentimes when we see that occur, we see some type of change in trend. Not talking about long term. I'm just saying right now, stay focused on the 30-minute time frame. If you're going to ask me where should price pull back to, I would say Stevie's red line. It is green with envy. That would be the price point of about 29.24. Look, if you take a look at some of the other 9 counts out here, as the ES Mini was making a high at 7:30 in the morning. This is back on the just a couple of days ago. Let me see if I can give you the date. That was the 25th, so 2 days ago. You can see how it makes that second 9 count out here and goes ahead and it pulls back. So it's a pretty cool tool to learn. Does it mean that it has to? No, nothing has to, but we're just simply using extraordinary tools that help us understand what's going on. So what does that mean? Is the high in for the day? It's possible, but we have to go take a look at other things. What are those other things? Excellent question. Hey, one of those other things, Jay was asking about Stevie's red line and earlier, and we can take a look at where the ES mini. So we know on a 30-minute basis, price in essence got up to a resistance or a level where it was just huffing and puffing in order to get to the top of that mountain. If we take a look at the daily time frame chart, at the same time it was doing that on an intraday chart, we can see that the daily chart got up to Stevie's oscillator and change line. The green line, about 29.31 is the print right now. You can, if you're watching on TigerTV, you see that. That is resistance until it gets crossed. If we're to see a close above Stevie's red line, it's green. Then what we're going to take a look at is price moving back to its all-time highs and probably higher. Yeah, that's exactly what the ES Mini is communicating. Here's what we know right now. It's up against resistance. Here's what we know about the 30-minute chart. It's up against, let's say resistance. It's up against a point just simply in the acceleration where it gets ready to do something else because of those struggles. So now what do we do? Now how do we figure this out? Well, I think we go to our daily profiles. And what we do is we pay attention to the daily. Earlier this morning, and what I know is that the ES Mini is trying to form a new weekly profile. I know that because it appeared at about 5:30 in the morning, 6 o'clock. It was there till about 7:30, and then at about 9:30, it disappeared. It was just like a magic trick, although there was no magic. And so at this stage here, here's all we know. Price is above resistance. And there's no reason other than Stevie's red line, red/green line, for price not to be able to move higher. So that really becomes the key. It really becomes the key, unless there's a pullback and a close below 29.14 today. And then if there is, then you should expect and anticipate that inside the ES Mini, the S&P, but inside the ES Mini to get a move back to about the 28.93. The other level to be watching, and you've got to remember, for those of you bears out there, and it always just amused me how everybody was just trashing the NQ, you know, as the S&P was making new highs and the Dow was making new highs. You know, everybody was saying, not everybody, but many of the bears, to justify their bearish outlook, were saying, oh, but the NASDAQ isn't participating. You kind of remember that? Okay. Well, today, or at 1:13 in the afternoon, the NASDAQ is more than participating. It's leading the charge. In fact, right now, the level to be watching at the end of today's trading session is going to be 76.70.50. That's the top of its weekly profile. If you close above that, you're going back to the previous highs, and then I would assume the all-time highs as well. So if you were the person that is short the market, and you were so convinced that the reason to be short the market was because the NASDAQ wasn't participating, watch 76.70.50. out there. Yeah, 50 cent. And then say, you know, maybe I ought to change. Look, the only thing that it meant with regard to the NASDAQ not participating, the real only thing that it meant that the individuals just simply weren't buying into the mere fact that these markets are preparing, they're doing everything they can to prepare to move so much higher for so much longer. Yes. That is what's going to unfold. It's not a matter of if. It is a matter of when. And maybe we'll know more Monday morning. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's do this here. Let me make sure I give you the good data, accurate data. Let's say you're not long now for some reason. What should you do? And I want to make sure that you know that what I shared as we were going into the break there is the bigger picture and the long-term picture. Sometimes it's easier to have that and know that and be able to take out a lot of the noise out there. And I especially want to make sure you have the big picture because many of you are already invested in the stock market, or at least should be. And with regard to those retirement funds, keep them in there. Keep adding, because on the timing thing, you don't necessarily have to get that perfect on your longer term your longer term trading capital that's out there. Just know that the Dow is going to be substantially higher years from now. The same thing with regard to the S&P, same thing with regard to the NASDAQ, same thing with regard to the Russell 2000. When that changes, I'll tell you. But don't expect for that change to occur anytime soon. With regard to today specifically, the numbers that you would be looking for in order to go ahead and give you that confirmation. We already took a look at a couple of the TAS profiles out there, but we're going to take a look at Stevie's red line or green line. We talked about it inside the ES Mini. You'd want to watch it. I can give that to you for the S&P too, I suppose. But let me give it to you for the ES Mini. The number to be watching is going to be 2932. That's the level to watch. Inside the NQ, the number is going to be 7617 out there. For the Dow itself, the Dow Equity Futures Contract, it's going to be, and you can write these down, panel number 3, 25309. 25, did I say 25309? Does that make sense? No, couldn't. It wasn't 25. 26,586. I caught myself, you see. 26,586. And inside the Russell, it's 1718. Russell's way far away from that. But if you see price close over those levels, what we have is a rising price oscillator above zero. That is very bullish. And in the case of the ES and the NQ that are trading above their market profiles, there's no resistance other than a prior swing point. But that just simply says you go back there. So that is the kind of the big picture market outlook and what to be paying attention to. With regard to the Dow and its market profiles, what yesterday did was it came down and tested the bottom of that box, 26,405. Yes, overnight it traded back below that level. But then it has regained that area, and this says it's headed likely to 26,654 next. then at 26,820. So the Dow, believe it or not, has a bit of resistance right now where the ES and the NQ do not as we speak. As to the Russell 2000, its next resistance level is 1706 if it can clear that. And the interesting thing about the Russell, let me do this for you. So this is kind of interesting here because Russell may be getting ready to exert its influence, whatever it's going to influence. And we say that, or I say that. Why do I say that? It's really a good question. If we take a look at the, maybe it wasn't from there. Where was it from? Right down here? Is that where it's from? No, it wasn't from there. If I take a look at, my apology, I was looking at something from the upside here. If we take a look at what the Russell has done, yesterday it entered wave number 7. So, no, that's another tool that you and I like to use here. Oftentimes, so we talked about the Tom DeMark setup, and that's a version of a wave counting system out here, different than than the Chapman wave aspect, although I'm not using the Chapman wave per se here. What we are looking for is the fact that the market typically will sing in the key of G, and once it makes that move, which here inside the Russell 2000, pretty impressive how it is. We are in that 7th wave. It says 7, wave number 7, 7th inning stretch out there. And it's done it pretty orderly and efficiently and relatively quickly out here. So you won't get a confirmation, or you can't get a confirmation unless tomorrow there is no lower low inside the Russell 2000. But all I can say is, something to think about. I did say I would give you the number inside the S&P 500 cash indice. So let me do that. The number being Stevie's green line. And that's, well, let me put up the box here, show the data to the folks. It's going to be 29.2590 to be exact. Why don't you round that up a little bit, and 29.26. So use that as a number. If price closes above that, then what you should anticipate, absolutely anticipate, is tomorrow's also going to be a nice update. Tomorrow is the end of the quarter. It's the end of a week. It's the end of the month. It's the end of the wonderful month of September. So, the month of September that is supposed to be so horrible hasn't been too horrible just yet. Maybe in the Russell 2000 just a tad. Okay, so what else do we want to look at? There's no responses, no emails, nothing inside the den. So I know that basically everybody is watching, the hearings going on in D.C., and I can't blame you for doing that. So I'm just kind of like free to roam, so to speak, and we should go to Rome. What else are we going to look at out here? Let's go take, and then speaking of Rome, get to sleep early tonight, okay? For all of you, the few people that are listening, you should get to sleep early. Why? Because I believe that the Ryder Cup starts, correct me if I'm wrong, in the den. I believe it starts like 2 a.m. I mean, so that really means it's 1:30. I like to get 12 hours of sleep a night. You know what I mean? I'd like to. I don't. But it means we got to get to bed pretty early out there in order to get up at 2 and start watching the Ryder Cup. So, hey, what else do we want to look at? Inside the New York Stock Exchange, no real confirming message here just yet with regard to its advanced decline oscillator reading, which is still below 0 out here. If it were to get above 0, close above 0, then it would tell us that the buyers are in control of the markets. If we take a look at the spot volatility index, well below 0 out there. So no real confirmation message here just yet, but use the levels that we looked at inside the equity futures contracts, the S&P that we looked at earlier. We've got a request out here from Sweet Ruby Thursday, and that is a take a look at silver. So let's go do that for Ruby. And as we take a look at silver, let's look at the December contract. Maybe what I'll do also, Ruby, is put up my synthetic contract, see if we've got any different levels. Are you long? Are you short? Tell me what you're doing. Although right now today it does look like silver is attempting to form a new daily profile out here. And the reason that we say that, Ruby, is because it is gold. Yes, silver is gold. At 2 a.m. 2 a.m. Thank you, Jay. Live coverage of the Ryder Cup. Yeah, 2-1. That's why I always love being in Hawaii, because you can wake up, especially during football season, right? I'm an early riser. That's pretty simple. And you can wake at 6 or 7 in the morning, and the games are already going. the football games, the college football games. It's a beautiful thing. You know, you watch it for a few hours, and then boom, you go out on the links, have a nice round of golf out there. What a great day. Okay, but let's get back to silver here. So if you're long silver, then what you're looking for is I'd say a close above 1439, but I can't say that because we've seen some closes above 1439, which is the top of the daily profile out there, Ruby. So what you really need to see, and just know that you've got some resistance, and it's major resistance. Okay, 1466. Just know that that is where the sellers are lined up in gold. That is silver, I should say. That is the top of its weekly profile. And it doesn't mean we're going to get there today. But that's the level where your eyes, my eyes, should really be focused. Know that there are snipers sitting right there. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's up 134, S&P's up 17. So Scott S. wants us to go take a look at PACB. So let's go take a look at that. We'll use our 3 time frames out here, our daily, our weekly, and our monthly. And Scott, I don't know if you're in it, you're looking to get in it, but nice looking stock chart out here. You can see that it is up today with some big volume. Trading right now at 570. So when I say big volume, what does that mean? It means that the last high that it made on a daily time frame chart was just a few days ago, September 17th. Well, I guess more than a few days ago. And when it got up to $5.42, it did it with volume of 1.5 million shares. So this is in demand today because it's only 1:30 and there's already 1.8 million shares. So it looks very good. Now, what's it doing on a daily basis? Well, at a minimum, it's forming another A to B equals C to the upside. It looks like this is going to continue to do so. So if it's so with regard to today, you know, where's the current price projection out here? The 1-to-1 is 591. It's a wide-ranging bar today, Scott, so I would say it's more likely than not going to do more than 1-to-1. Could get to 624, could get to 666. Sounds a little devilish, but that is the price projection out there. If we take a look at the weekly, and there's a lot of momentum out here in this stock, a lot of momentum. And I'm going to just focus on the weekly here right now. And when we began the show, we were looking at this, right? So we were looking at the 30-minute time frame. We were saying, aha. Well, as we came into 1 o'clock, we had gotten to a Tom DeMark setup 9 count. We know that when we see those, at least it explains to us, technically speaking, what to anticipate, which is a market pulling back to support. Support at that stage, we said, hey, Stevie's red line, 29.25. Of course, since we just went to 132, so we went from the 1-130, at 1:30, 1 p.m., we got a brand new profile. That brand new profile says support is now 29.23. with resistance at 29.32 out there. So at least we know what to anticipate with regard to where price is going. Well, in the case of PACB, that is Pacific Biosciences, California out there, Hotel California, last week was a Tom DeMark setup 9 count. And right now we are clearly above that. I don't know if we're above it with volume or not. Here's the most previous 9 count out here. You can see where things turned down. So we're back into those swing points from back in September of a year ago. But here is an acceleration move. That's how you interpret it. How do we know that that's how you should interpret it? That's a great question. If we come back and take a look at, I'm pretty good at talking to myself, aren't I? Yeah, exactly. If we take a look at the, here's a 9 count that occurred back at 3 o'clock in the morning on September 25th. So a couple of days ago. And that didn't mark a low, right? We saw the very next candle session take out that 9 count, and then we saw another 9 count move higher out here. So odds favor, can't guarantee it, Scott, but odds favor, you've got a real acceleration move going on inside of PACB. And by the way, if we do take a look at volume, just for blanks and giggles, you fill in the word here. The last time price was up here in 2017 on a weekly basis, it was about it was 7 million shares. Today you're at this week you're at 4.7. I don't care. You got an acceleration move going on, and I think this thing wants to trade higher. So where would it trade higher to? You know, it does have this little wall of worry. That's from the week of December 12, 2016, and that high is about 694. But thinking more likely what this wants to do is really get back up in here to the $10 area. That's much longer term, but looks pretty good. And so, Scott, I would just say to you, buy the next pullback, as long as it doesn't take place with the volume, so to speak. Okay, so thanks for writing in. Much appreciated, especially on this kind of slow day out here. So we covered silver earlier. Oh, good. Mike wrote it. Thank you. Hey, guys, gals, when you guys ask for questions, for me, I'm grateful for that. It is just so much easier to just actually cover what you want. I could go off into a tangent, you know, like I could tell you, like my favorite day. Did you ask me to describe my favorite day? Well, we were talking about Hawaii earlier, so you know it has to include that. My favorite day, and I have lived this many times. I used to own retail stores across the world, but in Japan specifically, my favorite day was to wake up in the morning in Japan, go play golf. By the way, if you've never played golf in Japan, for the most part, it's a full day experience. You get over there pretty early. You sit at the club, you eat breakfast, you then go out, you play 9 holes. You're forced to come back in and eat again. And drink, by the way, you got to watch that. But you are forced. It's not like making a turn in the U.S. You're going back into the clubhouse. You've got the next 9 tee time out there. And then you go do that, and then come back in and maybe take a nice sauna, or if you're up by where they've got the natural hot springs out there, do that thing. But so that's the beginning of the day. Get back, make sure you have a nice dinner, because the planes take off for the United States around 8 o'clock in the evening. Preferably go out, have some really nice sashimi, some great sake, get on that plane. But the plane is going to Hawaii. Because you start, for example, this could be the morning of the 27th, where we did that. You and I, we'd be doing this. I'm game for it if you are. And then when you land in Honolulu, because you got to come into the international airport, it's basically about 6:30 in the morning on the same day. So you get to extend your day. You get to relive it again. You grab those clubs. You go over to a great course, preferably in Lanai. You just start it again. Have a little breakfast. Back out on the golf course. Nice little sushi. And see, I could easily get distracted here, but Mike was not asking me to get distracted. He was asking, would you buy GDX today? Today's low was 1814. I don't know. Would we buy it today? Let's go take a look at it. Preferably, Mike, this is the preference out here. And look, I have to ask myself the same question every day. Should I stay in the long mining trade out here? But let's just take a look at GDX. Let's try to look at GDX on its own. But it's really hard to do that. It's really hard for me to do that. And the reason is because of the simple directional correlation, But look, if you got a hankering to buy it, which it looks like you might, let's come up with the ideal levels. And was today or was low that point in time? Maybe, maybe not. Now, it's not trading at 1828 right now. My system's having a little trouble updating. It's 1841. Oh, there we go. It's updated now. But what we can see, Mike, is that I almost say, 1807. 1807. Look, here's that Tom to Mark 9 count. So take a look at where price stalled, right? So that's how cool, or that's how powerful the tools that you and I use out here. They're very consistent. Again, they're consistent from the standpoint, again, nothing more bullish than a failed bearish pattern, and the opposite is true out here. Of course, here when GDX made its bottom, does it with the Rhodes Momentum Indicator bottom. There you get that nice little three-river Oba Nobunaba. Oh, as long as we're staying in, Japanese-ish morning star pattern out there, the three-river morning star. So, right now you're kind of like in the middle of this bearish structured box out here. I'd say wait for 1807 at this stage, or by the breakout back again above 1860. I hope that helps you out. But we'll go take a look at gold and why I'm kind of hesitant, period. We got to go see what gold is doing, don't we? I think we do. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go to St. Armand Circle and speak with Ray in Sarasota. Ray, thanks for calling. Thanks for holding. How are you?
Doing well.
Excellent.
Steve, I got a question for you on Gilead. Where do you see it going from here?
Are you in it? What's your outcome?
Well, I've got a long position, and I'm just a long-term holder, and
okay.
It hasn't done much over the last couple of years, up and down a bit, but I'm a little bit underwater right now on the price, and
okay.
I was hoping to see it close to $100 a share.
Well, I think that it's going to get back up to $100 a share. So, it is doing this little consolidation pattern. And the most recent, I'm looking, because you said long-term, I just went to a monthly chart. And I'm going to put this, are you able to watch this on TigerTV?
I am.
Okay, great. So I'm going to put this monthly chart up on the screen because it'll show you something. And somehow today we've been talking a lot about this Tom DeMark setup 9 count. And when that occurs on my charting system out here, although it's a little bit small, what I'm looking at from a monthly standpoint, to the extent that you are a chartist, I'm looking at July of 2016. And that high, there's a little green dash line going across it. And by the way, that high, just so you know where the resistance level is, at 88.85. So when price takes that out, at least at this stage of the game, you'll know that you're onto something and this thing has crossed over a resistance level. Until then, it's basically consolidating between about $65 and $85, $88. But of course, you don't need me to tell you that. When this did make its high, it did it like everything typically makes a significant high, which was with the Rhodes Momentum Indicator pattern out here. And when it made its low, it did that with that Tom DeMark setup 9 count back really in February of 2017. So it doesn't look to me like it is dead money, other than it's consolidating. As long as your portfolio isn't overly invested, and this is just one of your investments, then it looks okay. I don't see a reason to exit this position. Not when I take a look at even the daily time frame as we speak right now. It is trading above on a daily basis, and this is a little short-term positive for you. It's trading over the high of August 31st. That high was 76.59. The reason, Ray, that I pick out that day is because it's very clear that we had a nice, this is where sellers showed up, a nice bearish engulfing candle. They showed up because they saw this little gap to the downside that took place on August 15th. So your real next resistance level is going to be the low of August 14th out there, even though it's just a tad higher. It's 77.82, and you're going to be looking for price to be able to overcome that. On a daily time frame chart, what's nice is that yesterday we had the price oscillator, and that's the difference between two exponential moving averages. In our case, it's the 19 and 39, and we had that reach the 0 level. Now, it's not showing on my screen because I use my line to switch from green to red when I know that it's at 0. And so today it's back in the green side. We have a rising price oscillator above 0. So that's another little positive. And maybe from a daily perspective, it's getting ready to kind of take off to at least start to head back to that resistance area that you and I looked at on the first monthly time frame chart. So on a weekly basis, it says it's headed to 79.04 before it reveals the next piece of information to you. But you're pretty committed to this from the long term?
I am, and it pays a decent dividend while I wait.
Okay, so I don't see this giving us any signal, not yet at least, not as of today on September 27, giving us any signal that it's trying to make some kind of large A to B equals CD to the downside or anything along those lines, and that this thing is headed to 30 or 40 or 50 or something like that. So even though you may be under a little bit of water at this stage, it actually looks it looks pretty decent.
Good. Well, thank you very much for your comments. I appreciate it.
Hey, my pleasure, and thanks so much for calling. That was Ray in the beautiful town of Sarasota out there. All right, so I've got to go back to Mike's question, which was about the GDX and gold. I don't have to, but I'm going to. But you know, callers, this is call ahead seating. You call, you get right through. But what I was doing during the break, Mike, was, and this is it's not ambivalence. It's just kind of a cautious tone out here, you know. And so if you're not in the GDX, see, I'm in it. So each day I have to evaluate and say, should I stay in it, right? And it's not actually the GDX. It's two other equities out there that represent the mining sector. And so I'm always asking myself, you know, should I stay in it? And I'm looking for, you know, reasons to or not to. And the biggest problem here, I'll get to the correlation, I just couldn't find it, is this is a very short-term correlation chart. What I mean by that is the very bottom panel is where I'm taking a look at, in essence, I select the number of days to go see if there was a directional correlation on average, and this is set to 5 days. If I, for example, come back out here and I edit this chart, if I can edit it, what's going on? There we go. Now, you can't see me doing this. Well, you can see me doing it if you want. I don't really care. I'm not hiding anything. And if I just simply come up here and I change that length to a 10 period, so now I've got 10 days, you can see that basically every line is above 0. Likewise, if I say I'm going to do it as a month or 20 trading sessions out there, basically now everything is above 0. And it just says that you've got a directional correlation. So just for our purposes, I'm just using something simple like a 5-day period. And so this is so directionally correlated that it's just incumbent upon at least me to answer your question, answer my question when I'm talking to myself, you know, should I stay in it? Okay, is gold, the question is gold breaking through support? Granted, the GDX is behaving pretty well today, but it's still in this short-term downtrend, just as gold has been for a few days out there. And therein lies our problem, Mike. There absolutely lies my problem. And I'm perplexed, and I don't know what to do. So you tell me what to do out here, because I'll just simply show you the chart. And if we go take a look at what gold is doing, and you and I know we've got to take a look at what gold is doing around the globe out here, because it's no more about you and I and gold and the U.S. dollar index. It's a matter of whether or not traders of gold in general around the globe believe that it's something worth buying or selling. And right now, gold traded in U.S. dollars is trading below the bottom of its daily profile. That's 1192.60. It's 149. But at today's close, if it closes below that, that's bad news. It's especially bad news because we can see that gold traded today again, just as it did yesterday and like the day before, in terms of euros and pounds, lower. And there is the problem. Those folks are sellers. I promise you, Mike, if you're sitting in front of a screen and you're in the UK, you're in London, and let's say we're just going to go to Zuma tonight for dinner or something along those lines, or, you know, you're over in Paris trading, and you're not asking the question, should I buy GDX, knowing the correlation. You're just not asking that question. Now, if we go back to Tokyo, all right, and or Osaka. It's getting towards winter. We can go to Osaka and order some fugu. You know, that's pretty good. That's pretty good eating when you can get some fugu out here. Well, they're actually saying, you know, prices just simply pulled back to support. So they're buyers. Right now, there's only one group that's buying. It's Stevie-san. Because Stevie in the U.S. right now is saying, oh, man, not so fast. There you go. So should you buy the GDX, Mike? TFNN.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we Tigers and Tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. We got the 2-minute wrap up, and I've got a couple of questions that have come in, so let's see if we can get to those. The first one is coming in from Tim, who wants to take a look at AT&T. Can I look at it and see where is it that you would enter AT&T? So I'm going to give you a price range right now off the top of my head, and looking at the 3 time frame TAS profile charts out here, I'm going to say 3307 to 3326, so you're really close. It's at 3340, 3343 right now. I'd go with the probably to go with the 3307 level and to see if price can get down there and hold that area. We know that price ran into resistance of this gap to the downside, Tim, from June 13th that had volume of 195 million shares. So we know where the sellers reside. They're in this 3408-ish range. So see if price pulls back to 3307 and holds. That's the bottom of the profile out there. I hope that that helps you out. Let's see here. We had another question from Mike, and Mike wanted to take a look at Cintas, C-T-A-S. And Mike's question is, Cintas was brought up in Basil's show. Do you think Cintas will fill the gap from July 20th or bounce off the top? Well, I'm not going to completely read this because I only have a minute left here. Let me just give you my eyes on Cintas and what I see out here. And so what would that be? It's not a good week because price has closed below or is trading below the bottom of a weekly profile. And so what I can share with you, Mike, is we haven't seen that. We haven't seen that since 2016, the end of 2016. So here, what I would say is Cintas is headed to 173.68. I'm going to use at least the top of the weekly profile out there, CTAS. And in this quick period of time, that's probably about all that I can provide you. I don't know which gap it is you're talking about, but it does look like to me that Cintas, am I saying it right, wants to certainly trade lower. And so that's what I go with. So thanks so much, folks, for being here. Stay tuned. Your favorite polar bear, David White, he's up next. And then Tom O'Brien from 3 to 5. And I'll look forward to being back with you on fantastic, fabulous Friday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.